On Monday, media reports indicated that television broadcaster Walt Disney signed a non-binding term sheet with Reliance Industries to merge their Indian media operations. As part of the stock and cash merger, the entire Disney Star India with 77 channels and all of the Viacom 18 operations, which have 38 channels, will come together. Also, two streaming platforms, JioCinema and Disney Plus Hotstar, are part of the deal. Reliance is pitching to be the majority shareholder with 51% in the merged entity, leaving Disney with the rest 49%. The merger is expected to be finalized by February 2024, subject to regulatory approvals. But Reliance is pushing for an earlier completion by January end. This year, Disney Plus Hotstar lost the digital rights of IPL, and its parent company, Novi Digital Entertainment, ended FY23 with a net loss of 746 crore rupees. That's a 118% increase from the previous year's losses. Disney-owned television broadcaster Star India reported a consolidated net profit of 1,272 crore rupees in FY23. That's a 31% drop compared to the previous fiscal year. Meanwhile, Viacom 18, which streamed IPL through JioCinema, reported a net profit of 11 crore rupees during the same period. This is Disney's third coming in India. The first in 1993 was through a partnership with KK Modi's group, but it didn't work out. Subsequently, it bought into Ronnie Screwvala's UTV, but that too faced challenges. Finally, on March 2019, Disney India acquired Star India as a subsidiary after a $71.3 billion deal with Star India's parent company, 21st Century Fox. Disney India now owns television channels of UTV Software Communications and Star India. However, the loss of IPL digital rights was a setback. The ongoing merger with Reliance Group indicates its struggles to establish a strong foothold in the Indian market. Business Standard's Vanita Kohli Khandekar explains why Disney fumbled at cracking the Indian market.
Disney has never done well anywhere outside of the US that much, except for China. China is one place where it has done well because it was about theme parks and cruises. But wherever Disney is, Disney has to serve its own products, its fairy tales and Marvel books and mermaids and princesses. Disney does very well. But whenever Disney has to localize, and India is a deeply, deeply, deeply local market. 90% of what sells in this market, whether it's movies, television, is local product. So, Star was a foreign company, but it localized like this, Channel V, Star News, Kaun Banega Crorepati. They localize, and they localize not just programming, they localize management and thinking. Disney never did that fully. Its heart is never into localizing.
Investor enthusiasm for Disney's India business started depleting in 2022 after the company lost the online rights to stream the IPL tournament for 2023-2027, even as it successfully won broadcast TV rights.
Disney reacts a lot to what Wall Street does. Every percentage point up and down on its stock price on Wall Street decides things for it. Its shareholders are very aggressive and some of its biggest shareholders are very aggressive shareholders. So Disney has to react to them, and this possibly is a reaction to that. And Hotstar and Star have been getting a lot of negative press in the US.
Losing IPL rights triggered a user exodus from Disney's streaming app Hotstar in recent quarters. Disney Plus Hotstar lost 2.8 million subscribers in the quarter ending September 30. After the September quarter, Disney Plus Hotstar's paid member base dropped to 37.6 million from 40.4 million paid members in the previous quarter. Disney has been exploring a sale or joint venture partnership for its India business, which includes numerous TV channels. However, in a statement in November this year, Chief Executive of Disney, Bob Iger, emphasized that the company wants to stay in India. The impending merger raises questions about Disney's future trajectory in India. What lies ahead for Disney in the Indian market post-merger?
Effectively, with this merger going through, what happens is that Uday Shankar is back in charge of the Disney India operations that will be merged all probability with Viacom 18. And one realization that we've been talking about in the industry is that it takes an Indian team to run an Indian media company, and that's something where Disney has struggled, and it's something where Uday Shankar over the years has really shown. He's he's made a success uh, of the Disney operations in India.
Analysts indicate that the merger presents an opportunity for Disney to localize its content according to the Indian market and potentially create India's biggest entertainment entity. But they also anticipate some challenges for the merger coming from the Competition Commission of India, as Reliance has multiple entertainment businesses already under its umbrella.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.